Welcome back to Alberta Primetime and the Vocal Point now. The energy sector accounts for 20% of Canada's gross domestic product and 10% of jobs, but are Albertans missing opportunities in the busy field? And are we overlooking other business in our province? A federal cabinet minister and a new group of Calgary businesses say so. We'll ask the Monday Money panel about that stir and about Boomerang Kids. How long is support supposed to last? Jane Alm is an investment advisor with Angus Watt Advisory and National Bank Financial. Shafik Hirani is a director with Investors Group Calgary, and Beth Hamilton-Keene, director and portfolio manager with Moore Investment Management. Good evening, everyone, and welcome back to Alberta Primetime.
Hi.
Thank you.
Beth, Natural Resources Minister Joe Oliver is telling media that although our energy sector is strong, we can't afford to miss opportunities. What do you think he's getting at?
Well, certainly there's been a lot of worry and bureaucratic and lots of talk and debate about the various explorations, pipelines, and so on and so forth. And I think what he's worried about is just really missing those creative opportunities, whether it be investing in these pipelines and making them happen and so forth, or whether it's not overlooking some of the creative ideas that are emerging from various parts.
Jane, a group representing 150 Calgary companies and $25 billion in revenue is calling itself Calgary Business Diversity, and it's looking for greater support, saying they're overlooked politically. They have sat down with Mayor Naheed in Calgary. Are Alberta's oil and gas companies, non-energy companies rather, being neglected, overshadowed?
I think they're overshadowed, not overlooked. Our government, the provincial government, for as long as I can remember, has always been at least attributing a lot of value to the diversification. They're wanting diversification because they know that as a society, for us to rely on one sector means that rather that we will have a rough go through certain periods. We'll have more of a boom and bust economy here. If we can get some diversification, that would be really good. But it's hard for some of those companies to compete, and it's hard for them to get started. So what they really, I think, are trying to ask is say, look, maybe there needs to be some form of grant or some form of assistance that they can go to, or even a place for job pooling that they can get people who are not interested in being in an energy sector.
Shafik, what are the angles of a province where business may depend very much on the health of the energy sector, but also competes with the energy sector? Say, hiring, for an example. Calgary Business Diversity is talking about that, saying, look, receptionists can make $50,000 a year for an oil and gas company downtown. It's just too hard to compete.
Yeah, absolutely. And you know, it's funny, Alberta's in a tough situation because Tony Clement says that the oil and gas industry is about 10 to 15% of the Canadian economy. In Alberta, we run about a $187 billion economy, and the oil and gas sector accounts for about 90 to $100 billion of that economy, so almost 50%. And so you really don't want to mess with the gorilla in the china shop. The problem is when we're investing, we want to diversify, and we don't want to put all of our eggs in one basket. So they have to come up with an approach that does sort of help out industries like manufacturing that go against the grain, because if you live by the sword, you die by the sword. Oil and gas is a little bit of a volatile industry. You don't want to always be swimming with the stream. The small fish going against the stream have a difficult time. You want to help those small fish out.
It's a hard thing, though, Beth, to support the non-energy companies perhaps as much as they'd like, because the plain fact of the matter is if you've got 150 Calgary companies sort of trying to get a little more elbow room for themselves, they're worth $25 billion, but Suncor alone is worth $40 billion.
It really depends on what form that help comes in. I mean, certainly I don't think we want to be, in these times of austerity and caution and being careful with our resources, we really want to be very careful to make sure that it's not a financial handout, just kind of a quick leg up, because that's not very sustainable. It's really more about providing the platform, collaborating, thinking of the city as a whole, and really whether it's the city or whether it's corporations across the province, but really investing in and continuing that diversity and that the creativity, the collaboration, fostering the right environment for those businesses to succeed. If they can't succeed, they'll shut down, they'll move on, and of course we'll lose out for that. But at what price are we willing to see that happen? So there is a fine line there. It's not as simple as we'll just throw money at it. We must invest in diversity, and on it goes.
Jane, does the fact that we've got this group in Calgary forming and becoming very vocal maybe say that the province isn't doing enough, that perhaps there should be some more Alberta-wide initiatives, if not at the city level?
Well, the one thing that I think is quite fascinating, going back to what Beth says, is, I look through and we see job fairs, and we see job fairs that are looking for tradespeople, usually within the oil and gas industry. But you very rarely see job fairs for people, for companies that are outside.
So help yourself.
So one of the things that they could do, to Beth's point, to help themselves, is to perhaps have job fairs that could all be at the same place, lower your costs, and get some of new people that don't have experience. If the companies that are there and they want to survive, they will often have to take a chance on students that have just graduated that don't have the experience, because those kids cannot command those higher values.
Shafik, quickly to round this topic out, 52,000 more jobs. Statistics Canada's newest report shows that September brought 5 times more jobs than analysts were expecting, most in retail, wholesale, construction, and agriculture. Natural resources, along with manufacturing, shed jobs. Can we take anything from that as Albertans? Is it meaningless unless it's stringing several months together?
No, well, first of all, yeah, you have to look at the trend, but the trend has been pretty good over the last little while. The unemployment rate nationally is about 7.3%, and in Alberta we're looking at around a 4.4% unemployment. Your question, Jennifer, is what can we take from this? And if I'm an investor and I want to make money in the stock market, I have to really connect the dots. And if I connect the dots, if I see low unemployment, that leads to one thing, and that leads to more consumption. And consumption is the highest factor on productivity, or GDP. 66% of consumption affects our GDP. If growth is high, then the stock market goes up, and we're hoping for 2% growth. So these are good numbers that are promising for the Canadian future.
Growth happens when people are working. Thank you for your thoughts on this. Don't go away, because next up, Boomerang Kids. 15% more adult children are living with their parents now than 30 years ago. Nearly half are now bunking in on mom and dad through their 20s. Jane, the latest numbers from Statistics Canada show 42% of adults aged 20 to 29 are living with their parents, a pretty significant increase there from 32% in 1991, 26.9% in 81. What impacts are they having on their parents' budgets and savings?
Well, I think they're having a lesser impact than you might think, because what I see with my clients is if the kids are at home, they're providing some support, but they're usually helping them in the manner to be able to save to buy their own house. If they're not living at home, they're still helping them. So still having that same impact on the financials. I can speak for myself, because in 81 I was out of home, but I know that my rent was significantly less than what any of these kids would have to pay for rent today.
Right.
We didn't have the cars. Most kids used public transportation when I was younger instead of having their own vehicle, and you sure as heck didn't have a cell phone bill. So part of it is a little bit of expectations, that kids expect a whole lot more when they start now than when they used to have. But as a parent, you're always there for your child. My mom used to say that it didn't matter how old I got, I was still a kid. So
just factoring there too, the tuitions are so much higher. The list goes on.
Almost 11 times higher than when I went to university.
Yeah. Beth, could this be a benefit to the parents and the child if the time living at home, or as Jane says, at least helping through the 20s, is used wisely to pay off debt, to save? How do you make that math work? Do you need rules? Do you need timelines? It can't be a blank check, no?
Absolutely, and in fact, it starts at a very early age. This is not something that you start when they turn 18 and they're about to step out the door for the very first time. It's about managing expectations from early childhood. So if that means you've got an 18-month-old toddler and you tell her when you're 18, I expect you to have a job and out the door and so on and so forth. Now I say that in jest, but what you do need to do is reconsider as life progresses both your emotional needs and expectations for your children, as well as your financial needs and expectations for your children. And how does that merge into the overall family finances? There's a number of things that various parents can set up to do. One is they receive rent from their children and they turn around and help them pay off debt or help them finance the down payment on a mortgage. Some parents actually need that rent to help subsidize the cost. Perhaps they were staying in a larger home than necessary so that the children could return home and have a place to retreat to when times got tough. But like everything, it's about managing those expectations, and it's about being realistic as well. Every plan, whether it's a financial plan or a plan for your children to become independent, requires the ability to be flexible and adapt as life changes and throws new things our way.
So like anything else, don't overextend, I think you're saying as well. Shafik, you have a toddler. Ever think that boy might still be there into his 30s? Should we start thinking like that, people with young kids?
I actually have been telling my wife we should start charging him rent now, but it doesn't.
Smiles and giggles, maybe.
Yeah, no kidding. Unfortunately, doesn't speak yet. So, I think there's this trend, and I see this trend, in meeting with my clients, and I don't quite understand it because I don't think it's good for the kid, and I don't think it's good for the parent. And if I do have any adults, the cost to raise a child to 18 is $100,000. Let alone an adult to feed their groceries and their utilities. And younger generation, they're spending their money on material items now and living rent-free. What I would encourage parents to do, if you are a parent, is to charge your child rent. Do not think that they are entitled to a freebie, and it would actually be a very good lesson to the younger children. So that's my big advice for financial planning for adults that live with their parents.
And the flip side happens with the elderly adults too. As your parents age, as a family, you have to discuss how you're going to support those parents that might need financial support as well.
That's right. And there's many people that are doing both, have kids at home and are helping with elderly parents. But if your child isn't working, they're trying to find a job, they can pay rent and other things. They can do things around the house. They can do chores. They can do whatever. They can still contribute to the family, even if they don't have a cash flow. But as Shafik said, and as I said earlier, manage those expectations. That doesn't mean that they get an unlimited cell phone on your bill because you're putting gas in their car every week because they're doing this. There has to be some kind of line. Most of these kids want to be independent. They don't want to be at home.
Jane, we're going to change gears for a quick moment, just see what everybody's looking at this week in terms of markets, things that are affecting your clients' portfolios. You're looking at the U.S. as being on that fiscal cliff. Americans also on the verge of electing their next president. How do you see those things impacting us in Alberta, perhaps?
Well, one of the things that will happen is after November 6th, we'll know who the president is, who has control of the House of Representatives, who has control of the Senate. When we know those things, then we know what kind of compromise is going to have to take place to address the issues in the fiscal cliff, which are a lot of tax cuts coming off. We would expect that either president coming in would approve Keystone. Timelines may be different, so that would be really good for Alberta. The one challenge we have in our province with the energy is we've got a lot of energy, but there's not a lot of pipeline capacity, as we've talked about many times. So we need pipeline capacity, whether it's Northern Gateway, whether it's XL,
but even more generally, the fiscal cliff could possibly trigger another recession, could it not?
It could trigger another recession. One would like to think that the U.S. government and the people involved would do the best things for their country as well, because they are not going to want to drive their countries into recession, especially the House of Representatives, because their elections are every 2 years. So,
Beth, surprisingly optimistic consumer confidence in the U.S. according to the latest Reuters University of Michigan Index. What does it mean to you and possibly your clients here in Alberta?
Well, certainly the surprise was that the optimism reached a 5-year high in terms of in the U.S. During this last 5 years. It reached a point of surprised height. Of course, that leads into the hope and the increasing opportunity that perhaps U.S. investors and individuals may have with their vote and how they perceive the future going forward. What that may translate into for us is really some continued buoyancy on our end as well. So not only if you see that consumer optimism in the United States, that may lead towards more spending, a little bit more kind of growth and momentum to come from a more positive outlook. You may feel a little bit more inclined to invest in that new refrigerator or repair renovate the basement and so forth. And all of that, of course, leads to the economic activity. So if that carries forward and we see that optimism coming in the United States, you may see that optimism carry forward into Alberta and Canada and carry on globally.
Shafik, you're looking at Statistics Canada's numbers on manufacturing coming out tomorrow.
Yeah, tomorrow's a big day. You know, a lot of times people look at GDP numbers and unemployment numbers, but these are called lagging economic indicators. That means it doesn't really affect the markets. Leading economic indicators are things like tomorrow's number on manufacturing. So tomorrow we're hoping for about 1% growth year over year in manufacturing. If that's the case, then that means the economy in Canada could grow at 2%, which means the stock market should do well.
Jane Alm is a senior investment advisor with Angus Watt Advisory and National Bank Financial. Shafik Hirani is a director with Investors Group Calgary, and Beth Hamilton Keene, director and portfolio manager with Moore Investment Management.